All right, people. There was a CME gap at around 117,000. Bitcoin has now filled that CME gap, and it does seem to be bouncing back up a little bit. We'll probably have to go through the weekend to make sure, but there are signs that that was it. That was the bottom of this particular dump, and I wouldn't see why that isn't because yes, the PPI numbers are bad, but the CPI is still small, still pretty low, and essentially based on that, we're going to get a rate cut, and that's that. But yes, the CME gap, that's a powerful tool. It's a pretty powerful psychological tool. Like people always think the CME gap has to be filled. A lot of times it does, sometimes it doesn't, but this time, like this short one has actually been filled at 117,000. We actually slightly went to like 116,900 for a while. So that gap is fully filled and we are back in the upper 117,000. So hopefully that actually lasts and we can just go straight back up. But there are other signs as well. Coinbase has actually pronounced that altcoin season is going to come full scale, just ahead. So like Bitcoin dominance has fallen to a 6-month low. And if you look at Bitcoin dominance, it is 58.9. You look at the Bitcoin dominance, it kind of peaked in late June, early July, and it's slid down ever since. So Bitcoin dominance is 58.9. So Bitcoin dominance is at a 6-month low. And while altcoin market cap has jumped 50% since July, setting the stage for a potential September alt season. I still think it's October, November, December. I think September will be slightly up, but I'm definitely looking towards Q4. But September doesn't honestly seem to be too bad. Altcoins have seen significant recent growth, while crypto market conditions suggest there could soon be a shift towards cryptocurrencies outside of Bitcoin, according to Coinbase. We think current market conditions suggest a potential shift towards a full-scale altcoin season as we approach September. Coinbase Institutional Global Head of Research David Duong wrote in a monthly outlook report on Thursday. So Coinbase, I don't know if they'll be pumping these coins, but obviously like it's not here yet, but they do believe that it will actually be here soon. The Coinbase analyst joined a growing chorus of traders and market observers tipping for an imminent altcoin season. The firm defines altcoin season as when at least 75% of the top 50 coins by market cap outperform Bitcoin over preceding 90 days. Duong added that there was a significant retail capital sitting on the sidelines and money market funds, and Federal Reserve easing could unlock greater retail participation in the medium term. July's U.S. Consumer Price Index, or CPI, this week showed inflation holding at 2.7% year over year, which has seen the odds of a Fed September rate cut increase to 92%. I think on Polymarket, it actually fell from like 80 to like 75% because of the PPI, but still overwhelmingly positive for a rate cut. And of course, lower interest rates will unlock some of that money that's sitting in the bond market. Of course, people are excited that Bitcoin dominance is indeed declining. And like I said, it's 58.9, down from almost 65. Now, the best part about that is like we actually did have a dip today, and it didn't really go above 59.1. Like, you know, previous times when we actually had a dip, I mean, it would go back up. Like we had a dip in obviously November all the way down to 50 point something. And then we had like dips where it actually came down 1 or 2% only to go back up. Now we've actually dipped about from 65 to like 58 without actually going back up. I think this dip is about as big as the November, December one. And if it keeps dipping, then the bull run should actually be bigger than the one we had back in November, December. So that's honestly really what I'm targeting right now in terms of what's going on with crypto at this point. I really see this like Bitcoin dominance dip and the fact that we didn't go above 60 again once Bitcoin dumped from 124 to 117 as evidence that yes, the true altcoin bull run has started. Although we're not like in full swing yet, I do believe Coinbase is right. And of course, this will be spurred on by Ethereum, and we have better news for Ethereum coming on right now. So other treasuries swell as major firms launch record capital raises. So more and more people are actually getting more interested in Ethereum treasuries. Obviously, if they buy Ethereum treasuries, the price of Ethereum will eventually go up. Bitmine and SharpLink are raising over $25 billion to expand other treasuries as U.S. debt hits $37 trillion, fueling bullish crypto market sentiment. So the institutional Ethereum treasury race is accelerating as two of the biggest corporate Ether holders are raising billions of dollars to acquire more of the world's second largest cryptocurrency. Public Bitcoin mining firm Bitmine Immersion Technology is raising $24.5 billion through an at-the-market stock offering, while Sharplink completed a $389 million capital raise from common shares. Whales, or large crypto holders, have also been accumulating ahead of this week's key U.S. inflation reports. A new entity acquired $1.3 billion worth of Ether across 10 fresh cryptocurrency wallets, and that's surpassing the record-breaking $1 billion worth of Ether amassed by exchange-traded funds on Monday. So whales are definitely buying. Someone wants to amass $25 billion to actually buy Ethereum, and that's going to be a massive, massive boost to Ether. Now, obviously, the Ether ETFs are going to pale in comparison to the amount of money in the Bitcoin ETFs. But you're seeing a shift from Bitcoin into altcoins, and I do think Ether is like at the forefront of that. And like this is a public Bitcoin mining firm is looking to raise 24.5 billion through a new at-market stock sale. So I think they were only into Bitcoin before. Now they want into Ether. I think you will see more and more of that. And as the new altcoin ETFs come in, they might want to buy some of those too, which will boost the overall altcoin market. But right now, at least some of the money is shifting to Ethereum, which is why Ethereum has actually been going up the last 2 weeks. But this 24.5 billion raise is very good for Ethereum. So like, if you want some cheap Ethereum or cheaper Ethereum, you could definitely buy now, 4,400, still below its last all-time high. I think it's a fairly safe buy at this point. And I think it'll be above 5,000 pretty soon at this point, because there are people that are just like buying like 1 or 2 billion at a time, and that is enough to move the crypto market for sure. So that's really, really good. The other thing is that the U.S. Fed is going to end oversight program for banks' crypto activities, which means banks will have more free reign. Now, some of you are like, well, doesn't that just give permission for banks to screw us? Well, yes. But hear me out here. Even though it gives permission for banks to actually screw us, it will actually get banks to invest more money in crypto. So you got to kind of look at it both ways. And they're just going to go back to its standard supervisory process. So there's going to be less oversight, which means banks are going to have way more leeway, which I think will make them more likely to delve into the crypto pool at this point. The Federal Reserve Board said it would end a novel activities supervision program set up in 2023 to supervise certain activities related to crypto assets and distributed ledger technology. In a Friday notice, the Fed said it will sunset the program created in August 2023 and return monitoring banks' novel activities through to, the normal supervisory process. The 2023 program said it would be risk-focused and include supervision of banks providing deposits, payments, and lending to crypto asset-related entities and fintechs. Since the board started its program to supervise certain crypto and fintech activities in banks, the board has strengthened its understanding of those activities, related risks, and bank risk management practices, said the Fed. As a result, the bank is integrating that knowledge and supervision of those activities back into the standard supervisory process and is rescinding its 2023 supervisory letter creating the program. So that's actually been withdrawn. So the extra supervision over banks has actually been withdrawn. Obviously, like they're saying, it's not necessarily a scale back in oversight, but realistically, it is definitely a scale back in oversight at this point. So yeah, I think this is all coming together very nicely. You see, basically like Bitcoin has filled the CME gap. So like buy the dip targets. I think we're about to go up. So like buying right now might be a good idea. I think stuff might be like 10% more expensive, if you buy after the weekend. Obviously, I definitely could be wrong, but sometimes the CME stuff is actually pretty telling. BlackRock has also bought the dip as liquidations passed 500 million. Data from Cointelegraph Markets Pro and TradingView show BTC USD protecting the daily open as support. A double hit of hot U.S. producer index. This is from yesterday. And mixed signals on strategic Bitcoin reserve by Treasury Secretary Scott Bessent had sparked a swift 5% BTC price retreat the day prior. Data from monitoring resource CoinGlass showed crypto liquidations over 24 hours nearing $1 billion. That's what actually got us to actually dip. While longs unwound, buyer interest from one source in particular remained conspicuous. BlackRock iShares Bitcoin Trust, the largest of the U.S. spot Bitcoin exchange-traded funds, added over 500 million in BTC on Thursday. Its Ether equivalent added a similar amount, bucking the short-term price route. So BlackRock actually helped float the price. I don't know if they're really floating the price. I think they actually see the trends. I think like they know what's coming, and that's why they're actually buying right now. Of course, the moves by people like Blackrock did not go unnoticed by the crypto trading community, and that is the ultimate buy the dip signal. And they said BlackRock went all in BTC and Ethereum yesterday. Part of that is just going to be like their clients deciding to buy the coins as they actually dip. Bloomberg analyst Eric Balchunas added that Thursday's combined trade volumes for Bitcoin and Ethereum spot ETFs total 11.5 billion. For context, that's about the same as Apple stock. So it's really getting there. So yeah, people are noting this 117 CME gap. And of course, that was the post-PPI panic. Since there was a CPI gap, there was a CME gap there. That was the most likely region that crypto would actually fall to if there was a bad PPI, which obviously there was at this point. So we fell to it, we filled it, and now people are definitely bullish again. There are people saying how Bitcoin hit 400K by the year end. I think that's way, way too high. But overall, I think the bullish sentiment is probably correct because, you have loosening regulations, you have Ethereum treasuries getting $24 billion, plus you actually have BlackRockiness buying the dip. And they bought both Bitcoin and Ethereum. Now, I do think Ethereum is a better buy than Bitcoin at this particular point in time. I do think staking ETFs are going to come out soon, and that's something that Ethereum is going to have over Bitcoin because Ethereum has natural staking where Bitcoin does not. And obviously, if you want, when you're being asked whether you want like an asset that can get you 4% returns a year or an asset that sits there and does nothing, the big investors are going to favor the 4% a year because 4% of a lot of money that they invest is still a lot of money. So yeah, that's kind of like the crypto market and the crypto sentiment for right now. I think it's still massively positive, and unless we get really bad CPI or PPI numbers in September, it's going to remain massively positive. If you're wondering about Donald Trump's meeting with Vladimir Putin today, nothing actually came out of it as expected. He said there was some good progress and listening, but there was no actual deals made. But I don't think the Russia-Ukraine war really has too much of an impact on the crypto market anyway, so I'm really not watching that. I'm definitely going to be watching like the PCE numbers, the CPI numbers, the PPI numbers, and the employment numbers. Although I'm not really sure if they're going to report the employment numbers anymore because the Trump guy said he wasn't going to report them for whatever reason. So right now, those are the numbers I'm going to be watching, and that's I think what the decisions are definitely going to be based around. Like the CPI numbers, PPI numbers, PCE numbers, labor reports, and essentially the unemployment rate and things like that. So yeah, keep an eye out for those numbers. And hopefully we get some good numbers so we get 25 basis point cut and then another 25 basis point cut in October because that would really boost us and that would come just in time for the Q4 bull run. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.